Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So we'll go through our agenda. We'll go through our market update and not much with earnings going on. And then we'll have Joe's analysis at the end. All right, let's get started. So you can see NASDAQ, SPX still in one. Russell just transitioned to five. And kind of a lot of green here other than um, energy, which is in four, but all the rest are green. Pie wise, last week we're at 70, so we're 75 now. So it's getting up there. State ones overall at 30. Our oversold is overbought is 45%. So I don't have one specifically, though Joe has some good analysis on the pie percentages. So, all right. But getting decent transitions here from 7 to 5. So let's take a look at that pulse. So we had that crossover um, of 1 and 8. So it's been pretty steady, going up as far as the ones and the drops in the eights. If you look at the sevens, so we had the initial pop up. Let me get rid of that. So we had the initial pop up and we're getting follow through. So those sevens are starting to go into, doing pretty good into the fives. So, it's looking bullish. So the next step is for these fives to start going into one. So we'll see if if that happens. And obviously eights can continue kind of dropping down. But other than that, those are kind of the major players right now with the states. So um, that's what I'd be looking on, to see if fives keep trending up and if some of those fives start going into one. That's definitely bullish. Getting pretty let's go to the percentages here. Getting pretty high as far as 75%, pretty solid number there. Just back here, got up to 70, 77 here. So let's see if it flattens out here, right up against, key resistance for, the Russell and S&P. So, that's what I'd really be looking at, those numbers, getting above those numbers. So let me go through those charts now. So you can see this is the current state range. So we got the 4599.39. So 46 is top of our range. 52-week highs, 4607. So that was back here. So you can see, just kind of on this chart here, as we get up to that 4600, we're really having some resistance kind of mirroring back here. Just kind of slow grind up and then, just butted up against it and, that reversed pretty quick after. So, that's where I put a lot of attention, just kind of at 4600. Obviously, if we can break through that, the next level will be in this target 1-2 range, 4675 area. But 4600 obviously is a critical level to be looking at there. Let me do this real quick. So I'll throw out the ranges. That's the top. And obviously the bottom down here, 42. So we have we're above well above 50 and 200 right now. And just I think that's it. 4600. Last I checked, we were below there. We had a nice kind of run. I think we're up around 45.90 area this morning, but kind of pulled back from there. So that's what I'm looking at. I mean, getting above that, if you look kind of longer term on this chart, we haven't been that high since, good Lord, back here, 2022, March, we were above 4,600, and really back here, here's our all-time high, 48.18, I think that's the high. So, yeah, that was kind of that top there, when we had the initial swoon down, we popped back above 46 and then, really turned around. So it's been, 3 months, it'll be 2 years since that level, that's March. So, and, we touched it right here, 46. So that's the key. I'm not going to just keep harping on it. So that's the key there. Obviously, to the downside, you got the 50-day. That's pretty far below 44.30, and then just call 4,300 on the 200. So got those down below, and then entry price also is another support. So that's 4,500. So those are your key numbers for S&P 500. Russell went into 5, had a nice catch up here, because it was kind of dragging. A couple big catch up days here, so it's pretty much right near, there's our number 1900. You guys should all have that. 17 is the bottom, but they had a nice run up to get in this ballpark, 1900. So S&P and Russell are near, their long-term resistance points, so they're matching up. So if they break, they'll break together. If they fail, they'll fail together at this point, which is it's nice when things start aligning like that. So state 5, typically we would expect kind of this type. So get up around 1900, come back down, swoop through. But it's just a matter of getting through 19. So pretty much lines up with those targets initial. So getting above that, we'll see if that happens. So from here, let me clear that. So from here, state 6, which is kind of an unusual state, doesn't happen often. You can see since 2007, it's only been in there 57 days. But, that's the highest probability right now. And then otherwise, state 1, or, kind of drop back into state 7. So a little more bullish than bearish, but, nothing definitive, from the 5s. But, we talk about, from the bottoms, we get 8, 7, 5, and then 1 typically. So you can see that here, 8, 7, 5, and then 1. So same back here, 8, 7, 5, 1. So we'll see if we can get that 1 transition. But you can see back here, this 5 went in, was chopping and went up to 6 and 8. So that's kind of the 2 ways this can go from here. And, I expect heavy resistance at 1900. If we pull back, look at our 3 tops. All right. There's our tops. There's our bottom of the range. So, when it got up around 19, you can see back here, had lots of problems here, lots of problems, dipped down, even more problems, and finally broke through. So same type of thing here. So I would expect 19 to be significant resistance, we do have a Fed meeting next week. So, they definitely can move the markets, if they come out more bullish than what they've been. We'll have to see on that. So, just overall key levels, 19. You can look below as far as, support here. Obviously, this entry price, which we're at, we were above that this morning. So, we got up, let me see. Yeah, 18, right around 1890. So showing resistance once we get up around that 19. Same with the S&P gets up around that 46 and showing resistance. So that's what I just be careful of. When they start showing signs that it's resistance. So, but from here, expect turbulence 1900. We'll just have to see if we can make another break above. And, obviously, if we do break above, we'll be seeing if we can make higher, a higher high from the previous time. So that's kind of been the motive here since August, over a year now. Just pop up here, lower high, retest, lower high, just pretty much range bound most of the time between 19 and 17. So that's where we're at there. 10 years been, a big tailwind for the market. We dropped almost a whole percent from, the high up around 5s. We're almost near 4. So I think that's really been a big help for the market, going higher. So if those continue lower, obviously, the market will keep on chugging. So, and, that'll just be up to the Fed. Their messaging. Also crude's had a pretty big drop, which is also, tailwind for the market. So we have those things working for the market. Obviously, the balance sheet is working against it, but nothing big runoff wise, just kind of slow grind lower. Fed meeting. So it's December, pretty much guaranteed at this point, no hike. But if you go out, there's been big changes here. So now they're expecting first cut. This is a quarter point cut by March. So that's the highest probability there. And then, as you go further out, a year, that's all been kind of moving. You can see here, 27, kind of the middle is dropped. Sorry, it's not. So 425, so it's dropped like another quarter point, between those two. So right now, pretty much a point and another quarter drop from where we are next year. So 1.25% cut by this time next year. That's what the market's pricing in. So, I'm not, before we were talking about the Fed and throughout this year holding fast, and they've done that. And the market was way off on the cuts. I think now they're more kind of on target because, I brought up, this M2, if this correlation holds true, then they will have to cut, next year, definitely. So, if this holds true, then I could see this actually, playing out. If you look at current rates, these are spiked, we're about 1%, inverted here between the 1 and 10. And, these are just flatlined at the current Fed funds rate pretty much. So if they start cutting, these will come down. And just a matter of, if they have this by, let's just say they go to 4% by next December, then these 10 years would no longer be inverted. Like if these all drop to 4, these maintain, I think that's a whole different story, as they start rolling out more and more and there's less liquidity. I'm not saying I know what's going to happen, but it's definitely going to be interesting to see how the 10-year, um, behaves as we go forward with more and more debt and less balance sheet. If that's what they stick to, running off the balance sheet, but cutting rates. So we'll see. I mean, I think they went too far generally as far as the current rates. So I mean, it could have been right in here, and I think would have got the same bang for their buck. But yeah. So, but right now we're in the pause as far as the rates, and we'll just see how long. That'll be next week's meeting. See what their language is for 2024. So we know what the market's expecting, and we're just set to see how that plays out. But kind of short term, I'm just watching 19 and 4600 for these two indices. You can also just monitor the transitions to see, if we're getting good movement in from 5 to 1 and 7 still going to 5. Some of the 8s coming out to 7. So, but definitely elevated here. So wouldn't roll out, kind of short-term pullbacks and stuff like that, as we butt up against these resistance levels, but we'll see. So, all right, that's it for market. I pulled up another graphic real quick. It's a cool little chart. So this is S&P 500, the 10-year during Fed cycles. So, it has the hike phase, the pause phase, and then cut phase. And then obviously there's phases where they weren't doing anything. That's white. But yeah, so it's usually, I mean, how it's played out historically. You raise, they just hold it, and then something happens, and the cuts come, and it's like the market starts coming down, right? I'm not saying that's going to happen this time, but here huge hikes, um, held it, and then everyone remembers '08. But they did similar thing here, like pretty huge hikes, held it, and then .com exploded. COVID, I think that's just different. So just because it pretty much we had the lockdowns, and then everything returned to normal. They did emergency cuts and put it on the floor, and then did huge QT. So back here we started getting QT, from here. So I think QT would be another thing that you would want on this chart. But it's pretty much minimal up until here, '09, when they really started doing that. So let's see how this one plays, how long they hold it up here. You can see back here sometimes fairly short, and this one was a long time. So, but we'll just have to wait and see. But just thought it was an interesting chart. Nice, like nicely laid out. Yeah. So, all right, I'll open up to questions, comments on the market.
It is a cool chart, Josh.
Yeah, Twitter's undefeated with good research. All right, anyone?
Josh, Lee here.
Yeah. Yeah.
Hey, hi. I think we all listen to the Fed, and then I like to listen to certain people analyze it. There's this lady that's she used to do something with the Fed, and so she'll analyze what Chairman Powell says, give a good interpretation. Who do you listen to that you think is tuned in and understands and kind of has some record of being somewhat correct.
Well, I mean, I listen to, the Fed myself. Like I listen to the,
Sure.
what they say after, and like I glance at the minutes. I was telling Joe the other day, I think one of the best sources is it's called Zero Hedge. They have good analysis in there. That's kind of where I get a lot of my market news from.
Okay.
So they just post articles in there. Some of it's like paid content that you have to pay to get, like premium, but they have a lot of good, analysis and information coming out there. But that's probably the only. I don't do any mainstream. Anything that comes out of, they'll kind of do an analysis and what people say. Yeah.
Yeah.
So
Yeah. All right. Thanks. I was just wondering where you
hmm.
get your
Yeah. Joe, do you have anyone
information.
different? Or?
No, I don't, Josh. Nobody that I consistently look at. But
Yeah.
like you, I listen to the meetings also.
Hmm. Yeah, I think the press conferences are usually give a lot of good detail.
Yeah. All right. Thank you.
Mhm.
Yeah, this is Dave. I thought I'd throw something in there too.
Mhm.
I just listened to the conference call that Chairman Powell's on,
Yeah.
and because they only take about 15 minutes. If you listen, even for questions, it maybe go to a half an hour, but that's about it. I can
Yeah.
find that much time every time he speaks, I think. Then when I look at a news story that comes out and opines on what, oh, this is what Powell said. If I that isn't what I thought Powell says, I just totally disregard, just move on to the next. That's
Yeah.
not accurate news in my opinion, because of course it's my opinion, but um, so then if I read a story that I was sort of backs in what I thought about what the Fed said, and it's pretty much in line what I thought, then I go ahead and read the rest of the article, as
Mhm.
I figured that it's got a little more uh, I don't know, quality to it, or it's more accurate. But that's how I do it. It keeps me from reading about
Yeah. Well, I mean, I think about it like, okay, this is like I use Yahoo just for like live quotes.
German
Like if I go through this page,
source.
I might, if I spend 20 minutes, I might find one, maybe two decent articles. All the rest is just like I think mostly junk, you know. So that's why I just, this kind of site, and I'm not a paid affiliate or something of it. I just find it useful. They'll do a lot of the sorting for you, and then you can just sort through here, and it's a lot quicker than trying to find something here or like CNBC or that stuff. So
Yeah, I agree with you. It's a good way to weed out the bad news sources, if you will, in my
mhm.
opinion. Just listen to what that is saying.
Yeah. I mean, I've seen so many articles. It's like, oh, stocks are all-time high, and then like they're negative. I'm just like, wait, what? When was it? Like, why is that still up there? It's like, crude, it just, I don't know. I just don't even look at the news here much anymore. So also,
Since we're near the
I
highs,
like Twitter, I just, I follow like a real estate guy and, you know, um, like Zero Hedge, a couple other guys on Twitter, and you see people that follow them and what they post. So, I mean, same thing. You got to filter through a lot of stuff, but it's pretty quick, and that's where I get all these charts. This Twitter it comes through my feed, and it's a lot of good information on there. Just, I mean, you got to sift through it, and can't believe everything you see.
yeah, we're in December, so there's the Santa Claus rally versus the Santa Claus trade that you've heard about before, and
Oh yeah.
um, and to me, it just feels like, this is my feel like opinion here, that it feels like the Santa Claus rally just happened in November instead of December.
Right.
And now we're at near, the highs that you've shown on all your graphs. And it's like, it's going to be a little bit difficult to break above those
Mhm.
without any other new catalysts. And, the catalysts are pretty much all the way out there. We'll see what Joe says
Yeah.
about the earnings, for the S&P and whatever, but, they're out now. So, that's not going to drive anything now.
Yeah. Yeah, I think the big thing is like, the 10-year and what the Fed is gonna put out. So if they say they're gonna stay higher for longer, I don't think that's gonna be a headwind for the markets. And, we may get the 10-year going up again after that. But, I think a lot of it's Fed dependent right now, with all the earnings out pretty much for Q3. Thanks, Dave. Yeah, thanks, Lee. Okay, anyone else? Questions, comments? Feel free. Someone says? No? Okay. All right, so we're trying to just like informational note, we're trying to push our new website out. So we're hoping to have that available probably, I think we're trying to get out Friday afternoon. So hopefully by next week, you guys will, if you go there, we'll have the new website up. I can do a quick show you.
Josh,
Yeah.
will both websites be available for a little while?
Mm-mm. No, we got to do one or the other. Why?
Oh,
like this?
just things are in different places on the new website. So
Yeah.
kinda go to the old one, say, okay, how did I find it here? And see if I can find it over there.
Well, I think you'll find, I mean, here's the old one. This pretty clunky. So this is the new one. We have it broken down, basically how this is like broken down, analytics, earnings, trade ideas, backtesting type stuff. So, the login page is just top right. We implemented some new stuff, like a FAQ, and it's all here. It's a lot simpler, and cooler graphics too. So, yeah, if there's anything you need, all the stuff is saved, but we have to transition it, from the live link. So this is like in staging, so it'll go to become the live link here. But if you need anything, just, shoot me an email.
Okay.
Yes, Sudhir, I hope it's not, inconvenient for you or anybody else just to transition over.
No,
As
I think
Josh
I think it looks good. It's a smart move. It just, in any transition, just things are in different places. It takes a little getting used to,
Mhm.
Yes, and like Josh said, feel free to reach out to either one of us, anybody, if you have any issues.
Okay.
Okay. So, and we'll be pushing this one out too. Some of you guys have access to it, but same thing, instead of all this funky left hand menu, it's going to be up on the top, fairly, like easier to find stuff. And we consolidated a lot of things like trade scanners. We put all of them in there. Like, so it's just a drop down with all the different ones. So make things easier and be a lot, we think it's a big improvement. Not all the way done, but definitely good enough, good enough to be used right now. So other than that, I'm not sure if we're gonna do earnings the 13th or the 20th. So I haven't talked with Joe about that. Definitely within the next week or two. As far as current earnings, we got 7 trades open. So, one bullish runner, crowdsource, up a little bit overall, pretty good, for the bullish runners. The big problems has been the bearish runners. That's, our problem area. So it would be nice if we get a little turnaround in the market. So this one's down almost two grand. So yeah, still got time left on these, but obviously running out of time. So be nice if we could turn this around and at least get close to break even. But this has been the problem area for this earnings. But I think we're still above water. I haven't done the calculations, so like this pretty much offsets the bearish runners, and then we're generally up on the other ones, so we're still up, but it'd be nice to get these turned around. So that's where we're at, and nothing. I don't think much is left. I'll be working on that Q4 plan here. Yeah, I think we got. This will be the last one here. Bearish runner on the 8th. So this would be, the next one's, the 18th, 19th, the first pre-runners, that kind of time frame. So probably try to get it out next Wednesday. So any questions on that? Okay. I'll turn it over to Joe then.
All right, Josh, thank you. Hi, everybody. Let's see here, a couple things, maybe before I go to the charts. Let me pull this guy up. Where are we?
I thought you'd be in bed by now.
There we go. So let's see, a few things. It's been a heck of a month. I mean, Friday we have non-farm payroll. So, the markets obviously have been incredibly dynamic since, this time last month. The estimates, I think we all see are somewhere in the neighborhood, 150 to 160 new jobs. So we'll see what happens Friday. And then, we're right back into the inflation numbers next Tuesday and Wednesday, with CPI on Tuesday looking for, I think, 0.2% increase month over month and 4% for the year, where PPI is, according to the one source I look at, looking to be flat and up 2.4% for the year. So Friday non-farm, Tuesday and Wednesday significant inflation numbers. So we'll see what that does for the markets. I think it was Dan last week asked, when I was going through the pie analysis to, put that stuff down on paper. I will do that. I don't have it yet. We'll post that to the share drive. I just did want to review a couple numbers there. As Josh said, we're at 75% in the pie now. Looking forward, it's 6.5% to 7% of the trading days where we get over 80%, and it's under 2%. It's about 1.4% of the days where we get over 85%. So I would suggest that's what we look for going forward, because I think we still have time. And that's where I want to focus on time. Josh touched on some of the important levels, and I'll touch on them too. But we've got a lot of time in our state one leaderships, anywhere from, 4 to 6 weeks. And, could we get a surprise, next week with the inflation numbers? Of course that's possible, but barring any negative surprise, I think, the path of least resistance is up, in terms of earnings, Dave, I haven't seen anything new except, basically the market's looking for, darn near double-digit year-over-year increase in earnings, come early January. So, we've had that tailwind of oil. I'll pull up that chart. I think that correction, may be close to over the downside, but we shall see. One other just stat, all-time highs, both in the S&P and NASDAQ. It really surprised me because, those markets do diverge. We're basically 6% or 5.5% from all-time highs in the S&P and 6% with NASDAQ. So, it wouldn't shock me if we get through some of these levels that Josh was talking about going forward, because we've got time and, barring any surprise announcement, in terms of these inflation numbers, I'm not sure that we have any real headwinds. So let me, go to the charts. The oil, we've had a heck of a correction, and let's see, what do we got here? We're state 4, but here I think you got a pretty good 5-wave down pattern. The first correction, and then this whole pattern here, you actually have another 5-wave almost inside of the 3 pattern. So we're 1, 2, 1, 2, 3, 4, 5. 3 ABC 4-wave correction. Got to believe that oil is going to find a bottom down in here. So it's been a wonderful tailwind for the markets. Got to believe that tailwind's going to go away here, and we'll probably see some meaningful good inflation numbers, on Tuesday and Wednesday, given what oil's done. I just thought it'd be worth, pulling up. We don't talk about
Joe?
the. Yeah, is that
Lee.
Dan?
No, Lee.
Lee, howdy. Yeah, what do
Hey,
you got?
before you leave oil, could you help me understand why the price of oil is going down? Because I look at war, rumors of war, Middle East, Russia. I would think price of oil would go up. I look at OPEC plus reducing production. I would think prices would go up. I don't have a firm grip on why, and I'm not saying you do, I'm just asking you and the group, why is oil going down?
Lee, thanks for the question. I don't have a damn clue. To be honest with you, not a clue. But when I look at the chart, I would think it's very close to being done going down. And again, it's kind of interesting. I looked at the date earlier. Basically September 27th. That market rolled over in advance of the stock market starting to take off. The motivation for such a significant sell-off, I don't have any idea. I don't know if anybody else, on the call has a comment on that, or.
All right, thank you.
You're welcome.
Dan here.
My observation is that it's useless trying to figure out why something's happening, because we have a limited amount of information. Josh was just pointing out that he gets better information from Zero Hedge, which is a site I go to as well. But even then, it's incomplete. And I don't know why oil's going down or the stock market goes up. It's very hard. I thought the stock market would go down because yield should go up to uninvert the yield curve, but it hasn't happened yet. So, these trends are very hard to figure out because, oil prices are a worldwide phenomena and we only have US centric news.
Agreed, Sudhir. Dan, you were going to say something?
Dan here. I said something. I started to. I look at it as just supply and demand. We still have the inverted yield curve, which implies that we could have a recession coming forward. So when I look at the lower oil prices, I'm thinking less demand for manufacturing and things like that. So,
It's a big marketplace. Thank you, Dan. Sudhir,
you know, the
appreciate
other,
it.
I mean, the part that goes against that is, yeah, there's you know, the threat of war is always out there, you know, and you would think that that would be future demand, but right now, you know, there's not a war yet. So I think once the first shot, when and if the first shot is fired, then you know, all bets are off, and then we'll see what oil does at that point. You know.
We will. It has been, I think the magnitude of the decline has probably surprised everybody. And,
Yeah.
you know, Sudhir's point, it's such a global market, you know, figuring out the whys can be challenging, but that's why, you know, I like to go to the charts and, you know, you got the Elliott wave move down. You've also got, you know, just, you can see it's basically between 50% and 5/8 retracement, you know, the full move, you know, given those March and early June lows. So, yeah, you know.
That's why I watched the Delphian, the chart and the Delphian states and the green pie never lies.
There you go.
All the new stuff is, you know, you can analyze it 100 different ways, and we may not even be getting all the news necessary to analyze it correctly. But they found the Delphian states and the chart direction and the green pie, and all, they do not lie. They're unbiased.
And to that end, you know, there are, you know, back to the green pie, since you mentioned it, Sudhir, and, you know, it wouldn't shock me if we get to that, you know, 85% rarefied air. I mean, you know, north of 80, it's about 7% of the time. North of 85, it's, as I said earlier, about 1.4% of the time. And, you know, we haven't been to 85% since early 2021. You know, we've been in, you know, between 80 and 85, you know, a fair number of times, you know, since 2021. But it's been January, February of 2021, and only 6 days were we above 85%. Now, that was not, that you know, clearly was not the top of the market. And, you know, the days ahead, I'll do some analysis on that in terms of, you know, kind of the pullbacks and advances. I've talked about some of that, you know, in the past. But, you know, January, February of 21 was not the top of the market. That was basically, you know, the November period. And then, you know, coming out of the COVID lows, we got north of 85% in June with that first, you know, really aggressive spike. And then, you know, essentially, you know, December of 20. So it was really that December, January, February period of 2020 and then early 2021 where, you know, the pie was really extended. We got a pullback and then we raced again. So, you know, we'll see what the next month or two, you know, brings again because of the time that we have with a lot of these leadership indexes still to be in state one. I think we got an awful good shot. So, you know,
I will point out, if I can make a comment on the pie.
Please.
It dropped day over day, not week over week, but day over day, yesterday, the 5th, for the first time since October 27th. No.
That's great information, Sudhir. It's an analysis that you talked about last week with the trends, and yeah. we will put that together. And then I think, you know, the next step of analysis is, you know, looking at those extended periods and then where the heck were the markets, you know, 30 days, 60 days, 90 days after.
Yeah, I would, by the way, one day does not make a trend, obviously, you know, but the first day of drop was December 4th through the 5th. It dropped for the first time since October. It's
Mhm.
gone straight up since October 27th.
And we will, it's going to be fun to, draw those numbers out of the database. And, I'll guess that that period is probably top 3 over the last 15, 16 years. I'm not sure if you have a guess on that in terms of an extended, pie in one direction. And I'll bet it's top 3.
Well, it's got to be. I mean, the 2020 COVID low to that peak you're talking about has to be another one. I don't know how many days that was, but obviously this last run, we're going over a month, and it just went up every single day.
Yeah.
So,
Yep. Well, more to come on that for sure. I just, go through a couple more of these charts just to kind of make the point of time. And I just, pulled up, we don't talk about this chart much. We do have it on the homepage. We're not at all-time highs. And a lot of the charts I pulled up today are just, again, going back to that COVID perspective, just so we know whether we're talking, all-time highs or just, some form of retracement to the, November highs in most instances. But, be interesting. This is not a great state modeling index, but we are in state 1 now, just in the last few days. Be interesting to see if we get some legs. As we can see, it's certainly off of all-time highs. This does take into account 21 different developed countries. They're large and mid-cap stocks. It's basically all of Europe, Australia, Japan, New Zealand, and Singapore is kind of what makes it up. But, we've got some little bit of resistance here. Not that this, is real leadership, but I wanted to pull up all the recent state ones of the different indexes we have now, just to see in terms of where they are in relation to all-time highs, and then where are they also in terms of time. And as you can see here, we're 3 days in, and there have been 44 state 1 occurrences going back to 07. And, from a time perspective and percentage move perspective, we got a long way to go. We'll see whether the targets come into play. Josh covered the SPX. Great. The long-term perspective here, again, we are 5.5% off the all-time high. So we've got the 4607 July, I think, 27th high that Josh talked about. And then it's 4818, also, as you mentioned, in November of 2022. So, we'll see what's ahead, but here we are. We've got plenty of days, in the average state 1, and, there've been 58 occurrences. So, the state 8 and state 1s, as we all know, have lots of occurrences. There's a lot of math and numbers behind that. So, long way to go with, north of 5 weeks here. NDX is next, 6% off its all-time high, which, again, was fourth quarter of 21. Number of days, I think here still have, got, 4 weeks here. Be interesting, we get up to, targets 1 and 2, a little bit of resistance, ways to go to get to target 3. So I think that's kind of going to be real important. Some of these targets that I didn't mention, the target 3 in SPX, it's kind of in no man's land between the 4607 high and the 4818. Where are we? We're at 4753. So that's kind of in between. But I think these targets are going to come into play as we move forward. I just pulled up the Dow only because it's very close to an all-time high. As we've been reading, 369 I think was the all-time high again back in the fourth quarter of 21, and we're at 362 right now. So time-wise, still have lots of time here for sure. And then I want to go to, we've got 5 of the ETFs that are in state one. So I just wanted to analyze them both for, price versus all-time highs and time. XLK, been talking about, as a long time as, leadership. It went into state one a day before NDX, has continued to be leadership. You can see we're basically banging against all-time highs here. And that, interestingly, we got up to target 3 and banged right off. That actually was darn good resistance at 187. I think, that may be out of everything, the most important thing, if I were just, sitting here watching the markets, if this thing can get through target 3 and that 187 level, I'm going to guess we are just off to the races across the board in the markets. So XLK has been, leadership, and that's what I'd be looking to here, and specifically through this, recent high in target 3 at 187. Consumer discretionary, another. You can see we are we've gotten to all time. Actually, let me pull this thing back here. Sorry. Okay. Yeah. So that is not anywhere near all time highs. Going back to the COVID lows, but we're in state one here. Let me see XLC, and we've got another long way to go. Darn near, we got 39 days. And so, interestingly, XLC, and I think Josh mentioned before, hadn't been around all that long, so only, 12 occurrences here, in terms of the database. Again, I think the targets are going to play, a pretty important part in, these individual issues. XLY is next with the consumer discretionaries. We're basically in kind of a retracement level here, but another 34 days, I think, that we've got here, for in terms of time. So 2 more, the industrials, fairly close to all-time highs, just in state one, but again, long way to go in terms of time. So haven't reached any of the targets yet. That's my thesis for today. Really, it's just we've got a lot of time. The financials, always great to have, financial leadership, and certainly there've been plenty of headwinds there. We've got a long way to go. That's only been in state one for a little over a week. So it'll be interesting to see if any of the others transition into state one. It's 5 out of the 11 right now, and we'll see what the next 3 to 6 weeks brings in terms of continued upside, market move. I think, Dave, you mentioned maybe a holiday rally has happened in November. I think the surprise may be that it's not over yet, and we got more to come going into the end of the year. So that's a little bit I wanted to mention today. Happy to take any comments or questions, or turn it back to Josh. And we will get more analysis for you with the pie stuff, and get that on paper, one of these days for everybody, and post it.
Okay, thanks, Joe. Anyone else, questions, comments before we wrap it up?
No comments. I just wanted to say I wish everybody good luck for the end of the year here in the month. So
Yeah,
happy trading.
thanks, Dave. All right, thank you all. We'll see you next week.
Thanks, guys.
Thanks, everybody.